Hey guys, welcome back to KX Crypto. So for this week's video, I wanted to share a new strategy that I just recently learned, and the win rate of it is actually pretty good. It was around 70% when I did my trades. I did around 50 trades, I think, with this strategy. So yeah, it worked very well for me. So I'll show you with the calculator also what the profits can be. But first of all, I'll just quickly teach you with the strategies. It's fairly simple. It's not too too big of a deal, but the indicators that we'll be using for this, also we'll be trading Bitcoin only, and it will be in the 5-minute chart. So obviously we're scalping Bitcoin, not doing any long-term trades, but the indicators needed are MACD we'll need, and 2 EMAs also we'll need. And if you want, we can also put a volume indicator, just for the sake of it. So yeah, these are the indicators that we'll be using, and we'll have to make a small slight changes to the EMAs. So the first one will be the length of both EMAs. One of them will be 50, we can put it as, and the color we can change it, let's say blue, and just make the thickness the second level of stage of it. Alright, cool. So for the 51, let's give it a yellow color. Alright, and the second EMA we will keep it as the length will be 200, and the style color can change to blue itself. We'll keep it, and thickness second level. For the MACD also, we'll be making small changes to it. So we just need the histogram. We don't need the MACD and the signal line. So just click those off. So we just have the histogram with us. Alright, the next change that you have to make for the MACD is we won't be trading the 5 minutes in the MACD. We'll be trading in the 1-minute chart of the MACD. Alright, cool. So these are basically it, the indicators that we'll be using. Just confirm everything. 1-minute time frame, style is histogram is only there, perfect, and EMA 250, and as you can see 250, and yellow and blue. Alright, perfect. So when I say trading with a trend, what I mean is if it's an uptrend, obviously we take only long trades, and if it's in a downtrend, we take only short trades. So now the question might arise: how do you know if it's an uptrend or a long trend, downtrend? So since we're scalping, we don't really care about the long-term price action of the particular coin. We only care about the short-term price action. So for seeing that, we see if the yellow or the 50 EMA crosses up or below the 200 EMA. So if it's below the 200 EMA, we generally take short positions as it's a downtrend, and if it's above, we generally take long trends, because since it's in an uptrend. Alright, so in this situation, as you can see, it has come up and then it has crossed below the 200 EMA, right? So what we call, there's a particular term in crypto called death cross, and if it goes above the 200, it's called golden cross. But anyways, yeah, so that's basically it, how we do this. And yeah, so let me just show you some examples of how this trade has worked out in the past, of the crypto of BTC. So that's the EMA portion of the strategy. Now I'll just teach you the MACD portion of it too. So the way that we use the MACD for the strategy is by seeing these sticks. All right. If there's a so example, let's say let's take a long position. Yeah, as you can see over here. Oh God, why do I have this market order from like months back? Yeah. So as you can see over here, we are crossing the 50 EMA is crossing the 200, and it's coming down, and as you can see, a golden cross is happening. So over here, as you can see, we will obviously take longs, and we'll trade these longs on pullbacks, right? So what pullbacks basically mean are okay, cool, let's say horizontal line here, okay, horizontal line here, and a horizontal line here, right? So what a pullback means is, so let's say the price action of this coin is going in an uptrend, all right? So if the coin is coming like this, it was struggling over here, then over here we see some uptrend, right? So when it's coming to this uptrend, it usually bounces back up. Out uptrend never goes in a straight line. So that bounce back is what's known as a pullback. So what we do is we trade in these pullbacks. So we enter a trade over here, all right? And then as you can see, the price will again go back up. It will touch here, which is the next resistance line, and then it will come back, which is a pullback. So we'll sell our trade over here. We'll sell our trade over here, and then we'll come back down, enter another trade along over here, which is the pullback area. Again it will go up, and then like that, it will go up. So that's how we're gonna trade with pullbacks. Just want to clarify what pullbacks mean. Okay, cool. So I just want to give you an example now how we are going to use a MACD with this strategy. So as you can see over here, the golden cross is happening. We don't need to take longs, and so how we are going to use a MACD is basically when a long trend is happening, we wait for a red wick, red body of a MACD which is significantly different from or let's say significantly below than the other red ones or than the other candles. Okay, for example, see over here, there's a pullback happening here, right? Cool. In this pullback, let's see what the MACD says. Okay, so we know a golden cross is happening. So what do? We see this red tick which is significantly lower compared to the other ones, right? Significantly lower, right? So over here we enter a long trade. Okay, but we always wait for confirmation to just make sure that our trade is correct. So what we do is we just wait for like a 5 minutes or so and see what the next candle is. If it's a green engulfing candle, as you can see over here, it needn't always be a green engulfing candle, but if it is, it's perfect. If the green engulfing candle, we take a long position right about here. All right, so that's how this that's how we use the MACD for long trades, which briefly. So what we do is we see if there's a red tick which is significantly lower than the other red ticks. As you can see over here, there's significantly lower red tick, so we enter a trade over here since it's a uptrend, right? Our TP and our SL will be 0.5 and 0.4 respectively. Yeah, long position. So where are we entering our trade again? It was somewhere here. Yeah, here. So sorry, this was the engulfing candle, right? So we enter a trade over here and set at TP to 0.5 percentage. So 0.5, where that is 0.5, it's somewhere here, right? Yeah, 0.5 and 0.4 will be our stop loss. Remember guys, stop loss is very important when you scalp Bitcoin. Okay, cool. 0.4. So this is our first trade, and it was a huge, success. All right, perfect, cool. So our first trade was a success. Now let's go to some other trades and see from the past also. So as you can see over here, this golden cross happens. So we don't need to take long terms here, obviously. So over here, as you can see, when this happened, over here you can see one significantly lower MACD wick, right? So over here, obviously, we put a long trade, and let's see how that played out. Oops, sorry. Long term, so we'll put one here, right? Cool. Let's see how that played out. So you can see the trade was a success. So don't worry about this, guys. Profit is a profit. Always remember that in leverage trading, especially. Don't sulk on saying, oh, you could have gotten more, at the same time you could have lost. So it's always good to be safe. Okay, so be happy with your profits. Cool. So the next thing that we'll be looking at, let's see another example. Okay, over here. So guys, remember, make sure that since we are not looking at the long term price of a coin, just after like 3 or 4 trades when it's on top or down, just leave it. Okay, just stop trading because it's very risky after that. Okay, but anyways, just leave it. Just see, like after, for example, let's say over here. Okay, for example, let's say in this trades, let's say over here. So this golden cross has been going on for a while, right? So it's always risky to make a trade over here because it's going on for a while, and it can go down in time. So I'd say like maybe maximum 5 trades when it's an uptrend or a long trend. Then after that, just stop. It's too risky, all right? So let's say over here you entered it. Okay, let's say over here golden cross is happening over here, right? Okay, golden cross is happening. Let's say you entered a trade in this pullback, and you see price, you've gotten successful trade over here. Let's say you entered in the pullback, boom 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 boom, successful trade. All right, over here let's say you entered a pullback, boom boom boom. Okay, maybe over here you may have it SL, but either ways you went back up. And over here, yeah, so when you keep doing that, it gets riskier anytime, because it's always remember it's in the 5-minute chart frame, right? There's no long term, we have no idea what the long term trend is. So that's why I'm saying when you're on 5-minute chart frame, always just do like maximum 5 trades and just leave it. Just wait for it to go back up or go back down again. So now I'll give you an example of a short position which we can take. Okay, cool. So over here, this is not enough, but like let's just see. hopefully, yeah, I think this is all right. So as you can see over here, the death cross is happening. Golden is coming underneath the 200. So what happens here? We wait for a pullback. Vice versa for the short. So what happens if in this pullback will be going up, right? Obviously. So over here, let's take a short position, and over here, what we do for the MACD is we wait for a MACD to show a huge green tick, right, when it's underneath. So let's say, where does the cross golden death cross start? Death cross starts here, right? So let's say over here, and then let's see where a huge green tick is happening. Okay, as you can see, green tick happened here. So now you'll be waiting for a possible trade, right? Trade entry. So let's say you waited. So then price kept going up, obviously. So then you keep waiting, and then when you see that the huge red tick, you make the trade, right? So over here you saw that red tick. All right. So you're making the trade here. So let's see if that was a success. 0.4. As you can see, that hit the stop loss, unfortunately. But if you had extended your stop loss, which just don't, I wouldn't recommend that. But either way, that hit the stop loss. But then it would have been a successful trade if you had it. But see, that's how the market works. Maybe some gaps it had to fill, so that's why that happened. But like either ways, that was an unsuccessful trade. But like it's all right. Okay, so the next trade, let's say, okay, over here there's a thing, there's a pullback happening over here, right? Let's see in the MACD if that proves it. MACD, as you can see, yep, green tick is happening, and you see one huge red tick over here, so you make the trade over there, let's say over here, right? Okay, short term position, no, here I'd say, yeah, here. 0.4% stop loss, okay. 0.5%. As you can see, trade was very successful, worked amazing. Okay, so the next trade, let's say what we're gonna do. Okay, it comes back here. So it's already been 2 right now. I'll be very careful on my trades though, but like still a pullback is happening, huge pullback, touches the 200, and you can see 200 is acting as a area of resistance. So over here, let's say I'll put another trade in this pullback. Let's just confirm on the MACD also. I'd say like over here. Yep. Oh, this huge green tick over here. I would definitely put a trade over here because like it went down, and then that pullback happens, and that's somewhere over here. So I put a trade right there. Let's see how it played. Over here, 0.4 stop loss. Oh, very close. Okay, 0.4 stop loss and 0.5 TP. As you can see, trade worked out alright. Touches here, and you get the trade gets executed over here. But so yeah, so that's how this strategy basically works. And do let me know if you have any doubts. But I'll just show you one more. So I'd say like over here I would stop trading. It's already been 4, right? So I wouldn't want to risk it. So let's say it went down again, and then a pullback is happening. Pullback is happening over here. Let's see if there's a green tick there. Yep, a huge green tick over there. So I definitely put a trade in. Let me see over here. I put in trade, and I put it in over here because like that I need that red confirmation. So I put one over here, and like 0.4 as stop loss. 0.4. Okay. Oh, is it touching? Oh shit, it is touching. That's sad. But like we wouldn't have waited till there. What am I even saying? We would just complete the trade over here. So yeah, 0.5% TP. Successful trade, as you can see. So yeah, now I would stop trading over here and wait for the price action to go either up or like go further down. Oh yeah, it went further down. But yeah, so that's how this strategy basically works. Okay guys, so that now that I've told you what the strategy is, I'll just show you the win rate of this possible strategy. So let's start with the starting balance of $100 and win rate 70. We'll keep it because when I traded I got like around 72, 75%. So with my like 50 trades only, but like 70 trades is fine. And take profit obviously 0.5, stop loss 0.4. Number of trades, so in a month, if let's say you do 4 trades in a day, right? 4 trades in a day, so in a month obviously that's like 120 trades. So let's keep it at 120. Leverage 50x leverage.
So guys, make sure, since it's a very high leverage, it's very easy for your portfolio to get like legit wiped out. So always make sure that you only use like 10 or like 5 or 10% of your portfolio, otherwise it's too risky. That's why. So like if you're having a starting balance of 100, I'd say like use maximum $5 or $10 for every trade, because not only because of your risk of risk management, but like there's a thing called dollar cost averaging. So like in case you short the trade which you should have long, and then later on you realize it, you can also hedge your position and stuff. It's like a very complicated thing, but just learn that. So either ways, just don't use more than like 20% of your portfolio for a trade. So yeah, so exchange, I recommend using BYBIT for especially derivatives trading, because like the fees is very low. As you can see, limit order fees 0.025, market is 0.075. So use BYBIT. I'll leave a link down below for you to start up on BYBIT. But anyways, yeah. So now let's just run the strategy and see what our profits can be. Oops, sorry. Yeah. So as you can see, $9,016 you can make in a month with just $100 if you use this if you use the strategy properly with 70% win rate and all of these stuff. 120 trades if you can manage to put in a month. Yep, $9,016 in a month. So with just $100 as a initial investment. So like that's a very good return. So yeah, guys, that is basically it, the strategy. And don't worry, I will be showing you a live trading with the strategy like in the coming week or so. I'll probably do a 24-hour scalping Bitcoin challenge, so you can further understand the strategy. But anyways, that's it, guys. So if you found this video useful and helpful, please make sure you like, comment, and subscribe. And also comment down what you want to see next, strategies, or maybe any price analysis of a coin, or maybe you want me to review a coin. Just let me know. I'll do that for you. But anyways, for now, that's it. I'll see you guys next time. So peace.